In building this Excel worksheet, all of the green fields are given materials or input cells, and the yellow cells represent calculations. These need to have an Excel formula. When you're using Excel, don't use it as a giant word processor, but rather use formulas that link to input cells, so as inputs or given amounts change, your entire worksheet will change. We've got a traditional income statement over here on the right for the Alpine House, which is a large retailer of winter sports equipment. And our recent quarter, we're told that skis sold for $70 per pair. That's given. Our variable costs are $50 per ski sold, and the remaining $20,000 in selling expenses are fixed, and that's going to be our total $30,000 in selling expense minus the variable portion, which we're going to calculate with an Excel formula, and that's going to be our cost per unit of $50 times the number of units that we sell, which is going to be 200 skis. So 10,000 will be the amount we have in variable selling cost, which means the fixed portion is the 30,000 minus the 10, or 20,000. We're going to input that as a given amount. We're also told that the variable administrative cost is $10 per ski, and the remaining 8,000 is fixed. And again, in terms of calculating this, we would take the total administrative cost from our traditional income statement, and we're breaking it into a fixed and a variable component. And our variable component is $10 per ski times the 200 skis that we sold, or $2,000. And so we can see our total fixed admin cost would be $8,000. The company purchases skis from a supplier for $450 per pair, and in the most recent quarter sold 200 skis. So again, that's given. So our cost of goods sold then would be the $450 per ski times 200 skis. Our total revenue would be our selling price of $750 per ski times our 200 units. And we can then calculate our total contribution margin, which is equal to our $150,000 in sales minus our total cost of goods sold minus our total variable selling minus our total variable admin. So we have a contribution margin of $48,000, or on a per unit basis, we would have taken the $750 selling price minus $450 cost of goods sold per unit minus our $50 selling cost per unit minus our $10 admin cost per unit for $240. Notice our $480,000 then we can calculate vertically, or we could have also calculated as our contribution margin per unit times the number of units. Either way, we'll get the same answer. Our net operating income then is our contribution margin of $48,000 minus our fixed selling minus our $8,000 in fixed administrative cost. So we have a $20,000 net operating income, which is the same that we have for our traditional income statement, where we break our cost down by functional area, where here we've broken them down by cost behavior. Fixed cost at the bottom and our variable cost up top. And we're going to find this contribution margin approach is very useful for calculating break-even amounts and analyzing our performance later on in Chapter 5. Let's go ahead and build a data table that shows us what our net operating income would be at various levels of units sales. Currently, we have $200 or 200 units. If this were, say, 100 units, our loss or net operating income turns to a $4,000 loss. If we had 105,000 units, our net operating loss would be $2,800. And our goal is to build a data table which will show us how our net operating income changes for a variety of levels of sales. So to do that, I've got down here the unit sales we're interested in. And the first thing we're going to do at the top of our data table is pick up our net operating income, because that's the item we're interested in. Then the next thing we're going to do is we're going to highlight these cells, our cell B23 all the way down to C44. So we're going to highlight those cells, and we're going to come up to our menu bar up top, and we're going to go to the Data tab, Data, What If, Data Table, and we have our data input in the form of a column. We're going to want to take these values for units and input them into cell G8, which is the cell right here that had our unit sales. Hit OK, and our data table fills out, showing us here was the $4,000 loss with 100 units in sales. Here was our $2,800 loss with 105,000 sales. And there's our $20,000 net operating income with our current 200 units in sales. And looking down here, we can see our break-even point, where our net operating income is 0, occurs somewhere between 115 and 120 units. We can use Excel's goal seek function to calculate our break-even level of sales. To do that, we go up to Data. Up top, Data. Come over to What If, and we're going to use the goal seek function. And in our goal seek function, in this case, our break-even point was where our net operating income is 0. So we're going to want to set cell C17, net operating income, to 0, and we're going to want to do that by changing our units sold. We can do that, and we find that our break-even point occurs at roughly 117 units. So we can put 117 would be our break-even point. So those are just some of the basic tools that we can use in Excel in analyzing financial performance.